Hello everyone. We're going to talk a little bit about the TUE swing algo. Now, the algorithm is nuanced and complex, and I'm not going to lie to you, it's difficult to learn. This isn't something that you should expect to simply pick up and be able to instantly trade with. Nor is it something that is made for a beginner. It assumes that you already have trading knowledge. If you don't have knowledge, if you don't already know how to trade, when you signed up for this, you should have been given access to a number of educational courses. There's hours worth of video that Brett and myself have recorded. Go listen to those first. I know you want to jump into this, but go listen to that stuff first. Because you need to have a basis, a foundation of information in order to understand the things that this does. So that's first off the caveat that I wanted to talk about. Now, we'll talk a little bit about the algorithm itself. This here is the settings and trading view. And there's a few things that it does. Now, this may change over time. We may do things a little bit differently as we launch our automated platform. But for the most part, this is going to remain the same, the settings and everything. All right, I brought up the most current version of the algorithm here. This is version 1.4. Now, we may go to a version 1.5 when we get to the automated trading, but like I said, most of this will stay the same. So we have here check for live trading mode. We'll just start at the top. Check for live trading mode. Whenever you are actually putting alerts in, when you want to receive alerts from the strategy, whether you're using it for automated trading for your own usage, this has to be on. Because when it's off, it only trades between these dates. So it's for backtesting certain dates. So you want to make sure this is on. When you click it on, it'll go all the way to the latest date, or well, till today. It's live, right? And it'll also give you some extra flags so that you can see what's going on a little bit easier. Next, we can show break-even and stop-loss points. Let me zoom in on one of these and we can see it a little bit better. I'll show you this. Turn these on. Okay. There we go. This one's easy to understand here. Sometimes you're going to get some of this. You can just kind of ignore this. These lines only matter when you're actually in a trade. Okay? I'll say that again. These lines only matter when you're in a trade. So here's the start of the trade. Okay? There's the entry. And so right here and right here is where it starts. The one at the top is the break-even line. The one at the bottom is the stop loss. It is normal for these lines to change and adjust during the trade. That's done to move along with the volatility of the stock. If the volatility drops, then we want our stop loss a little closer. But if it's very volatile, then we can have our stop loss a little bit further away. And this adjustable stop loss and break even, which I'll explain in a moment, have been pivotal to the success of the algo. All right, so the stop loss does exactly what you think it does. If it comes down and hits it, there's actually one right here. Comes down and hits it, boom, we're out. Okay. The break-even point is a little different. So, let me see if I can find one. There's one here somewhere. Here's one right here. So the stock entered here, it came up, and right here, it hit the break-even line. When that happens, the stop loss changes. The stop loss will change back to a break-even. By default, it'll go back to the same price that it entered at. In this particular case, we're on the daily chart, so it closed on the open of this day. So that's why it's actually a little bit below it. Normally, if it's intraday, it'll close at exactly the same price. But there is one difference to that. It's right here. This is called the offset break-even. If we use an offset break-even, we can break even earlier than, we can stop out earlier than actual break-even. So we can keep a little bit of our money. And as we go through these settings further, we'll go through that. But you should understand that in the context of the break-even line. The break-even line just controls when that stop loss changes. Okay? Next, we have direction control and trend or contrarian. Direction control does what you think it does. Long only, short only, or both. That's it. Very simple. So if we go to long only, we'll see the graph at the bottom of the screen change. Okay, it changed significantly because now we only have long trades. If we go to short only, see it change. And although it makes money, it's not very good. There are going to be some stocks at some times, maybe you're only interested in one direction, and that's what that's for. Now the next one, trend or contrarian, is whether you want to follow the overall trend of the stock or if you want to try to scalp contrarian trades. And normally when you change to contrarian, you need a lot of adjustment. Yeah, so the same settings, this is a great example, the same settings for trend following do not work for contrarian. So look here at the bottom of the screen, see it's gone completely downhill. But what's happening here is that as our overall trend is in an uptrend, we now take our short entries only for contrarian trades. Remember how I mentioned you would need to know how to trade to understand this? And this is why. Now, one thing about contrarian trades, we often will use a static profit target with contrarian trades. So, for example, you put static profit target, we'll say short target, and we'll use $1. Oh, let's hope if I turned on absolute value. There we go. All right, so this actually has two ways of calculating static profit target. Use multiplier or absolute value. The multiplier can change just like the break-even and stop loss does, but we'll get to this in a little while. Again, I'm showing you this just in the capacity of the contrarian trades. All right, so we put on an absolute short profit target of 100, which in this case is $1. So we can see that we entered here at 385.60 more or less, and then we exited here at 384.60 more or less. It's hard to tell on this chart, but it should have given you about $1. Now that's what those static profit targets do, and use of those is really highly recommended when doing contrarian scalps, which, like I say, end up being more scalps than actual trades. And if you're a trend trader, contrarian trader, then you'll understand that. Personally, I'm a trend trader, so I tend to make mine off of the trend. However, it's very powerful to use that contrarian one on something like the ES 1 minute or 3 minute futures. You can get some pretty nice scalps off of it. All right, next we have the settings table. That little blue table to the right there. Turn it off. Turn it back on. That all this does is it compacts all your settings into one spot so that you can take a picture. That's it. That's all this is designed to do, because this whole, should have closed it. This whole thing, you would have to take multiple pictures to get. That's why I compacted this into a table. So if you want to save your settings for something and you don't want to go up here and do an indicator template, then, or if you want to share them with somebody else, you can just take a screenshot of this and, Bob's your uncle. There you go. So that's why that exists. Okay, next. We have only allow trades during a specific time frame. This one we use a lot, and it really only applies intraday, of course. You can turn it on, and then you have to deal with this time string. The time string has a very particular format, and it's right here in the tooltips. Time in Eastern Standard Time, syntax as follows: start time to end time, days of week. All right, so days of week right here. This is for Monday, Tuesday, Wednesday, Thursday, Friday. Number 1 is Sunday, and number 7 is Saturday. So, for example, if you only wanted Tuesday, Wednesday, and Thursday, it would say 3, 4, and 5. 3, 4, and 5. So that's how that works. This is very useful because frequently in the markets, the last hour, known as power hour, tends to be very volatile. Signals get mixed up quite a bit, and if we can just remove the last hour from trading, that frequently will give us a lot of benefit. And also, sometimes we'll see the first half hour removing that is pretty good. And then frequently, removing Monday and Friday and just having 3, 4, and 5 in the time string is very, very useful as well. You'll have either around the same net profit, maybe slightly less, but your profit factor and win rates will go way up with much less trades. So the fewer trades that we take to make the same amount of money, giving us a higher win rate and a higher profit factor, is always good. Always, always, always good. Next, we come to the section on trend. This is the main section that's going to help determine your strategy. So at the top here, we have the trend movement factor and the trend length. These short-term numbers are what helps determine your entries and exits. The movement factor is how much the stock has to move to generate a new trend. So if it just moves up and down a little bit, very slowly, it won't generate a new trend to possibly give you a trade. Okay, so if you have a stock that's not very volatile, you're going to have to reduce this number significantly. And I've also found if you're on lower time frames, you have to reduce this quite a bit, down to like 1.2 or something like that, if you're down on 1 or 3 minute time frames. And that's why. Because the stock, talking in absolute values, tends to not move as much on the 1 minute time frame, obviously, as it would on the daily, right? On the daily, we've got this one candle right here. It's 354 to 363. It's almost a $10 jump. It's not going to do that in one candle on the 3 minute. So that's why this has to be adjusted. On higher time frames, you'll have higher numbers. On lower time frames, you're going to have lower numbers. The trend length is a little different. This helps, the best way to explain this is the same way that you would use length on anything, right? So if you use length on a moving average, we're going to talk about in a minute, it smooths it out. The longer it is. The shorter it is, the quicker it reacts to changes in movement. And that's what we have here, the trend length. So if you want it to react quickly to changes in movement, this will have lower numbers. If you want it to wait and really make the stock make a change, then it has much longer numbers. These two numbers may seem similar in that explanation, but I promise you they're not. They're two very different things. And I'll give you some examples. As we go through this video, I will show you how to adjust these, and you'll see the differences in what it's doing, and it'll make more sense to you. I will say this short-term trend length, don't be afraid to try things like 30, like really high, especially if you're on low time frames. I was doing, I think it was maybe AMD yesterday or Microsoft or something. Anyway, on a really low time frame, it needed like a 30 in here. So this can be adjusted significantly in different directions. The next one here is your type of long-term moving average and moving average length. This one I will explain to you. It's very simple. We'll turn that on. So this helps determine whether we're going to go long or short. If we're above this and we have normal trend following engaged, then we're only going to go long. If we're below it and we have trend engaged, then we're only going to go short. If we have this set to contrarian and we're above it, then we're only going to take shorts. Set to contrarian and you're below it, then you'll only take longs. That's how that works. It has a number of types of moving averages. The exponential moving average, which you should all be familiar with. A simple moving average, should also be familiar with. Weighted moving average, which is similar to an exponential in that it gives more precedence to earlier numbers, sooner numbers, but it's calculated a little differently. And then finally, the whole moving average. The whole moving average is a completely different can of worms. I would recommend looking up how it's calculated so you can understand for yourself, but it is designed to move with the stock with almost no lag. It's a very interesting moving average, and every now and then it comes in really useful. For example, doing Forex, doing really low time frame Forex or low time frame crypto, I found the whole moving average to be quite useful. What you're going to do here is, and you'll see this again in the adjustment videos, you can start off, I usually just recommend starting at EMA 200, and then as you go through this and you adjust everything, come back up, you can start to kind of mess with this more towards the end. And again, I'll explain that as we go into the adjustment videos. Right now, we're just kind of going through the list here. And then, of course, we have moving average length. You can change its length, right? Next is volatility. You can forbid trading in areas of low volatility. Essentially what this is, we'll click it on, you'll see the change down here. Yeah, and it looks all wonky, huh? What this is designed mostly for is when you can't use the CVD. The CVD, of course, is my, let me see if I can find it here, my cumulative volume delta indicator. Here it is right here. When you can't use information from this, because you're on a ticker that doesn't have volume information. And that's, for example, Forex. Most Forex, right? There's actually futures that have volume information, but your general standard Forex doesn't have volume information. So this is another way to kind of filter things down. I'll talk about CVD in just a minute. But what it does is it adds in a few other moving averages that it looks at, and they have to be stacked right, and you have to have an amount of separation between the two, and that amount of separation is here in the volatility multiplier. So the higher the number, the fewer trades you're going to get, essentially, because it has to have a lot of movement in the ticker in order to register as a trade. So again, this is really only useful in stuff that doesn't have volume information. And let's talk about that now. So this here is my CVD indicator. If you don't know how the CVD indicator works, for this section, you're going to need to know how. So I highly recommend that you go watch that video now, and then you come back to this one. Okay? Volume length right here. There's only one thing to adjust, and it corresponds with the yellow line, the fast line. The yellow line in the CVD indicator is essentially an average over time of how the volume is moving, how it's building, if we're building bullish or bearish volume, that sort of thing. And When this is turned on, it takes that into account for its opening, for trade opening factors, right? So if you want to open long trades, but the volume is going against you, it's not going to open them. Now let's go ahead and match our numbers. So we can see here 42 is what we have up in the algo. Make sure this is set to 42. It corresponds to the fast moving average length. All right, and now that we've set those to match, you can see here what it's doing. As the volume increases and goes up towards the bullish side, and we get an entry here, those things match, so it can go long. Okay, same thing here. This long entry, volume's going up, so it can enter. Same thing on the short side, it'll do the same thing. So that's how that works. That's how it works together. Keep in mind that the algo pulls data from the Heikin-Ashi version of the CVD to smooth it out quite a bit. So sometimes the numbers won't, like it may not show that it's going up if you're in regular candles, and you can just switch over to Heikin-Ashi and you'll see the differences. All right, next we'll look at the risk multiplier for the stop loss. Let's turn on our stop loss lines. Now this is a really interesting number, and I'll show you this more as we go through the adjustment videos. But essentially, right at your stop loss, generally if this is too close, you're going to cut out a lot of good trades. So if we go to like 0.5, see how it brought the line up quite a bit, and see we dropped ourselves from 70% win rate down to 65, and like our profit factor actually went up a little bit. But in a lot of tickers, it's not going to do that. The one that we're on right now is SPY, and over time, SPY only goes up virtually. So bringing the risk multiplier up will actually probably help the profit factor a little bit. But I'll show you later in the adjustment videos as we go through like some of the 3-minute time frame stuff. The stop loss multipliers, the tighter you make them, the worse off it is a lot of times. And I'm going to show you some interesting things with these. But that's what they do, is they change the stop loss. Same thing for the break-even multiplier right here. You'll see the break-even line up there. Drop it down. See the change. There's a change right there, okay? So you can see as it went up, it hit the break even here, and then as it came back down this day, stock price dropped all the way back to the entry price, and it stopped out. Okay, so that's what, we talked a little bit about it earlier, but that's how it's adjusted. And these do have very large impacts in what you're doing. The offset break even, we already talked about that. The offset break-even is an absolute value. There's no multipliers here. It's only an absolute value. And use the tooltip because it explains how to program the value in here properly. Okay, for stocks, futures, and Forex. This one is add a tier 2. Add a tier 2, or add a second tier, frequently will deliver higher profits, and in these cases it doesn't. When you're looking at like 3-minute, 5-minute time frames, frequently adds a second, or it does add profits, but it usually will drop your profit factor and win rate quite a bit to where I don't really like it. There are some stocks, though, that this works really well on. So adding a second tier, what it does, it's easy to see on this one. Click that on. Okay. So what it did was it had us go long with a second tier right where we would have had our break even. Right here. And then it added more stock. And interestingly, that was also a small profit on the same ticker. But then as it came over here, They still went down and broke even down here. And the reason that break even is actually higher than the entry price is because you have a higher average entry, right? Because you added a tier 2. So that's what it does. It doesn't work very well on most stocks. It is an option, though, if you'd like to try it. Most of the time, what it's going to do, like I say, it will give you a higher net profit, and we'll see that as we go through the adjustment videos. But in virtually every instance, it simply makes more sense to go with a higher starting entry amount and just buy more shares. The way the size is programmed is as a percentage of your initial entry. So if you entered with 100 shares and you had a tier 2 size of 30, the second tier would be 30 shares. Okay, so we have the static profit target here. We talked a little bit about it earlier. We'll look at it again. Use static profit target. Okay, so we'll turn that on, and it's going to kind of mess up your lines here. We can turn those off. All right, so we have use static profit target, absolute value, long static profit target of, we'll put $5 in here. Okay, and again, this has tooltips. It's important to note that the static target value is programmed differently than the break-even value. All right, so we have this here. We entered at 403.45, closed at 408.45, more or less. Okay, so that's a static target value of $5. That's how that works. That works just as you would expect it. Without this turned on, we have our dynamic take profits. You can see one right here. It says small take profit, small profit. This is one of the reasons that this algorithm works so well, is that it will take profits in very good places, frequently hitting near the top of a move or near the bottom of a valley, depending, long or short. In this case, we were pushing up and it started to pull back, but it caught it before it pulled back. Now, it did keep going, and that's why it just takes a percentage off, so you still have some. But that's what it does, and it does it really well. So we'll go back to here. The only thing that you adjust with this is the size. So, and this is in percentage. So if this said, for example, 50, okay, it takes off 50% of your initial size. So we had to round a little bit in this case. It took off 14 shares of the initial 29. Now, if it had another one, it would take off 50% of what's left. So if you had 15 shares remaining, it would take off half of those. So it would take off 7 or 8 shares right here. That's how that works. It's always a percentage of your remaining position that it removes. And you can adjust these here. It's normal to get pretty big changes in the stock, in the curve, as you adjust these. And there's some reasons why. Again, as we go through the videos next, we'll talk about them, and I'll show you examples. It's just important to keep that in mind, that there are pretty significant changes with these. How it works is it uses our our predictive oscillator right here. As the oscillator crosses over, you can see here it crossed over, and as it crosses over, it takes a profit, and then it also uses the histogram, which you can't see very well on this chart. Also uses the histogram to help it take profits as well. So it's using this predictive oscillator to find those areas. The last section here is the backtesting start and end times. So you can choose the date you'd like to start, date you'd like it to end. I recommend always going to the current day. Start time, though, is very important because not all stocks trade today like they did in the past. For example, if you wanted to test AMD on the daily, you would need to start in 2018. Whereas testing the SPY, you could go back into the 90s. There's no problem with that. So that's why this has the start and end dates available here. All right, so now we're going to start going through a few different tickers, a few different time frames, and looking at how to actually adjust the algorithm for whatever you'd like to trade. So we have here pulled up is AMD. I've got the algorithm put in here, and let's do the 3-minute time frame. Okay. Now it's normal for this to look terrible when you first load up, and that's because it's just using the same settings that it had programmed in their stock, and those are set up for the SPY, not for this. So what we have to do is come in here, and now when I backtest on the 3-minute, really only interested in the last several months worth of data. So let's change this a little bit. And that's because over time, as you get further and further back, especially on the lower time frames, the data becomes less relevant. So if you're on low time frames, we'll just go through yesterday since we have the full day. As you go through this, the data that's further and further back is less relevant because stocks trade differently over time. And when you're on lower time frames, the shorter that time frame is going to be until its trading style changes. So that's why you have to continually adjust and update over time. Now in the future, we're going to come out with a machine learning segment to this, to our automated trading strategies, which is going to do this part for us over time. But I'm going to teach you here how to do this manually. Now, again, I'm going to preface this section by saying if you don't already know how to trade, this is not going to make a lot of sense. And you need to know certain basics. You need to know how to read a chart. You need to understand trend, momentum, how to size yourself properly, how to stop yourself out of a trade, all these kind of basic things. If you don't understand a lot of those, again, go and watch all of the videos that we've given you so that you can get a better understanding, because this algorithm and the sections we're going to go through now, it's designed for people who are full-time traders, or at least aspiring to be, and understand what they're doing already manually, and they want to move to an automated setup. So you need to go get that foundational knowledge. Otherwise, some of this, or a lot of this, is not going to make a ton of sense. But what I'm going to do is now, for the rest of you that know what you're doing, I'm going to teach you how to adjust this. First of all, we should talk, now that we've set the dates, make sure live trading is off. Yes. Okay. So now let's double check those dates are set. So we go under list of trades, and we'll go back. Okay, first one's the beginning of May. It's perfect. All right, so we'll look at this screen first so you can understand what we're looking at. It's pretty easy. Net profit right here, total closed trades. This number does include take profits, so keep that in mind. The percent profitable is going to be how many total closed trades are profitable, and the profit factor. Profit factor is very important because it tells you how large your winning trades are compared to your losing trades. So if you have a 2.0 profit factor, that means your winning trades were about 2 times the size of your losing trades. Obviously, the profit factor is very important, and that's the main number that we're going to be looking at as we adjust this. Drawdown is also important because we want to keep that down. Average trade, I don't really look at too much. Average bars in trades is good to know only insofar as, you can see it down here in the performance summary, average bars in losing versus winning. We want to make sure losing has very few bars in it, and then we're cutting ourselves out of losing trades very quickly. So here on this this graph, you can see the red area is your drawdown in equity, or excuse me, is your drawdown. The blue area is your equity. You can see over here the value of the account, and over here gives you the drawdown numbers. We start always with a $50,000 account. The order size right here just uses 20% of equity for these purposes. That tends to give you a pretty good look at what you're doing. But when you actually set up for an automated trading, for the automated trading platform, you're going to just be using contracts, which is equivalent of shares instead of percent of equity. All right, so we'll start to adjust. First thing we'll do, trend or contrarian trades. We want to go with the trend. You could set these up, like I said before, to do contrarian trades, but we're just going to look at trend right now. Only allow trades during specific time frame. I'm always going to use this because I only want to allow trades during the day and only on certain days. This is in Eastern time, so I'm going to cut out trades during power hour. I don't like trading during power hour because it tends to be very messy, right? And 0730, that's 2 hours prior to our market open. So we'll move this to 0930. That's when the market opens. Okay. So we'll also, in my experience, it's best to remove Monday and Friday. We'll do that. And we'll do some comparisons at the end. So I'm going to change that time string. Okay. Now you can see we've cut down our number of trades a lot. We're down to 104 trades over 3 months, 3 days a week. So we're looking, I don't know, like a couple trades a day, maybe something like that. 1-2 trades a day. That's perfect. It's right where we want to be on the 3-minute time frame. So that's good. Now let's look at our movement factor. Now remember, one of the things that we're looking at here is profit factor. So we want to adjust this to get the highest profit factor. Normally on these lower time frames, working here on the 3-minute, we're going to want a lower number. So let's move this down, and we're going to watch what happens to the profit factor. It's going up a little bit. And don't be afraid to skip way down here. There we go, 1.7. At this stage, don't look a whole lot at the chart. What we're trying to do is just watch that profit factor. Okay. It's about the highest number I saw. It's about 1.7. And, you know, I forgot we're not on futures. So we're actually going to want this set to regular. My mistake. We want this set to regular. If you're not on futures, leave it set on regular hours. Okay, now let's try this again. Yeah, 1.34 down here. Now I know from experience that these lower time frames need low numbers. So down here in the low ones at a 1.3 is pretty good. Yeah. So let's try here. Now, remember I said before, sometimes you need really big lengths on low time frames. So we'll move it out a bit. Okay, now we can kind of start looking at the curve. See how the curve is starting to get this upward angle. What we want at the end of this is from low left to upper right. That's what we're looking for. So we'll go up further. Okay, curve is looking better. Profit factor looking nice. Let's try some more. Let's try a little more. 1.56 right here. 1.56 is pretty good. Let's try a little more. Okay, and it went down. Looking for 1.56, 1.563, 567. Okay, so we'll stick right here at 26. I'm going to leave the moving average for right now. I will be back to mess with it, but for right now, I'm going to leave it alone. And that's because I know from experience that on most equities, the EMA 200 is going to work pretty well. So I'm just going to leave it. On this particular stock, I'm not going to use the volatility multiplier. I'll show you what it does. See, we'll lose all of our trades. We got 20 trades, and they aren't very good, obviously. A lot of times you can drop this number way down and still get quite a few of the trades. We got 73. Turn it off. We got 93. But it usually comes with a trade-off. And if you have the CVD, then you generally don't need the volatility multiplier or the volatility filter. Sometimes you can use it. Sometimes it's useful to use, but it's pretty situational. Okay, so let's look at the CVD length. Usually on lower time frames, you're going to want a faster CVD. So I like to start about 25. Okay, we've got 1.96 now, 1.96, and check out our curve. It's starting to look better from the lower left to the upper right. Go down a little bit here. 0.82, keep going. 0.75. Ooh, 2.5, look at that, big difference right there. Let's check 20. That's way down. Let's check 18. That's way down. 19. So you want to be sure you're not cherry picking, but as long as the numbers right around it are pretty close. So like if we go down to 18, we had 2.3, 2.4. That's not a big difference. If we go up to 20, it dropped us down to 2.0. So there might be a cherry pick trade in that. And what I mean is it misses like one trade or something that makes your backtesting results look a little better than they really would be. But as long as it's not a huge difference, then you're probably best off. And if we can look around at this, like if we drop to 15, see that right there goes down significantly. And 25 was significantly worse. Yeah, see that's also 1.9. So that's telling us 19 is fairly good. Right there. Okay. Next, we've got our stop losses. Now, this strategy will close a trade even without a stop loss. It'll take profits, and then eventually, when the trade is no longer valid, it will close it all on its own. And you can see that here on the chart. Right here, for example, it believed the trade was no longer valid, so it went ahead and closed it. You know, if you have a good strategy, if you can put in a virtually unlimited stop loss and still be profitable. Okay, so we'll look at this here. Let's change our stop losses. The very first thing I like to do is just put in like a 5 and see what it does. Okay. So we put in really high numbers. You can see the stop losses, they're absurdly far away from the entry. And look, we're still really profitable. So that tells me that number one, the rest of these settings are really close to accurate. And number two, the strategy is going to work very well on this stock. So now what we can do is we can take these and we can dial them in a little bit, maybe bring down our drawdown a little bit, try to get a little bit better profit factor. And also what it'll do is help prevent us from catastrophic loss. Now, there are some people that will trade with virtually unlimited stop losses. That's fine. That's a strategy. People can do that as long as they know what they're doing and they trust what they're doing. Personally, I like to have a stop loss a little bit closer to reasonable. So reasonable tends to end up starting at 2.5 and working its way down to 1.5. So what we'll do here is start to look at the numbers, the win rates, the profit factors, and bring this number down. It went up a little bit. Up a little bit. And I'm looking at profit factor here. Watching profit factor and drawdown. It's better. A little bit better. A little bit better. So we want to keep going until this starts to hurt us. Now that right there might have hurt our profit factor a little bit. Let's try a little lower. 0.36. 2.38. So we still have a 2.38 and our drawdown has come way down to only 336. Try another. Yeah. Might be able to go a little lower. 2.42 right there. And a 313 drawdown. It's not bad. Now we're starting to get a little tight with our stop losses, though. Still looking okay. 5.7. 0.63. This is just kind of getting too tight, though. And see, our win rate has started to suffer. And even though these numbers are going up a little bit, and this one's going down a little, our net profit hasn't changed a whole lot. We're still at 29.17. Let's run this back to 1.5. See what that net profit said. It was 29.17 down there. Okay, so yeah, it did drop a little bit. So it looks like we can actually bring this kind of down a little bit further and squeak just a little bit more out of this. But I want to be a little bit safer. The 1.7 looks okay. I like 1.7. I always err on the side of looseness with stop losses because it gives you a better win rate, and usually it doesn't affect the rest of these numbers too much. And if you have a better win rate too, that's what I like to see, and that does feed into the profit factor a little. So let's do the same thing here with the short risk. Okay, we're at 2.4. 0.41. 4.1. 4.6. Try another. It's kind of going down there. 1.9. It's pretty good. Curve is looking really good. Check out the curve. Lower left to upper right. And this nasty little dip here, but sometimes you get those. Can't really do much about it. Okay. All right, let's look at the break-even multipliers. I've explained to you how these work. Generally, somewhere around 1.5 is going to be just about right. So we'll move them around a little bit, see how it changes our profit factor. 2.49, 2.42, 0.45. Yeah, I don't really like the way that's going. We'll go up. 0.41. A little higher win rate. That's not really doing anything. Yeah, to a point where you keep going up, it won't really do anything because the stock's moved far enough away that it'll just close on its own before it actually hits a break-even stop. So we'll go ahead and bring this back to 1.5, and I think it had one better adjustment. Yeah, 1.4. So we'll bring it to about 1.4. And on the short side, we'll do the same kind of look at it here. 2.5 here. Okay, it's looking pretty good. 1.3. Yeah, no change up here. We'll drop back to this. Okay. If you've got a couple of numbers that are the same, like 1.3 and 1.4, I'll go with the higher number. You always want to err on the side of looseness. All right, so next we'll use the offset break-even. This is where when it hits that break-even number, it will keep a little bit of profit instead of going back to the absolute break-even. I like using this a lot because you keep more profit. It helps your profit factor and win rates a lot, brings up that net profit a little bit. So let's mess with this. You can see here the tooltips. 1.00 is going to be $1. So we're on an equity here. So let's use 25 cents. That's a place I like to start when I do this. And then of course we got to turn it on, right? Okay. So we can see immediately our win rates came up a bit. We're at 74%. Profit factor came up a little bit. Net profit came up just a tad. So now the question is, with this offset break even, is it setting the stop loss too high and cutting us out of trades that it otherwise would have made good? Or is it not high enough and we can be keeping more profit? That's the question you have to ask yourself, and that's what you now have to figure out. Thankfully, it's adjusted the same way the others are. You can go up and down until you find your answer. So here at 0.25, let's drop this to 10 cents, and we'll see if this changes from a 2.5 and 2,900. Now, this is a point where I'm not going to care about the win rate anymore. I'll look at profit factor, and this is where I'll look at net profit. Okay, so we've got 29.84 and a 2.5. Okay, and that dropped us significantly. Win rate came up slightly, which should happen because every now and then, the stop loss a little bit further down now, it'll catch a trade that keeps going up. But overall, that just kind of hurt us a little bit, and it obviously likes to keep more money than 10 cents. Still kind of liking 25. Okay, 2.6. We'll go up to 30. Oh, that kind of hurt a little bit. 35. No, that's actually a good one. 2.57 and 3,000. Let's double check again what this was. 2.56. So when you start to look like that and it's not a huge difference, again, I'm gonna go with the lower value here because it's gonna give us more room to move. I always err on the side of having more room to move. Now, other traders might be different. You might want it tighter. That's all up to you and your trading style. Me, I like it a little bit looser because I've noticed that over time, my method of dynamically taking profits does really well, but it needs room to move. Okay. So we'll go to add a tier 2. Generally, and I talked about this before, generally these aren't going to come out amazing. So let's see the change here. Remember, we're at 29.84 and 22.56. Okay. So we gained profit. We're up a little bit. We got about 400 more. Profit factor dropped a little bit. And of course, our win rate fell. That's to be expected. And you can we'll just do like double the size. And see, that's actually pretty bad. Because now when you have losses, they're much larger than they would be otherwise. If you do like 10%. Yeah. 30 is kind of a sweet spot, I think. Try 40. Yeah, 40 is not bad. So if you wanted to run a second tier, that's about the size you would do. And of course, that's percentage of your original tier, right? Personally, I'm going to leave it off. If I want to scale these numbers up, I'll enter larger initial positions. But that's what it does. static profit target. In this particular situation, I'm not going to be using a static target because I want my dynamic take profits. Like you see right here where it says small take profit, long small profit. I want to use those instead of a static target, but I will show you an example coming up of using a static target. Okay, and now the take profit sizes. This is the percentage of open position that it's going to take. So let's see. A lot of times, if this is a stock that can make nice sustained moves, you'll want lower numbers, especially if you're swing trading. If you're swing trading, lower numbers are usually better because that way it holds on to it for forever. Sometimes when you're day trading, though, higher numbers are better. So we'll try 50. Where are we going here? From 29.84 and 2.56. 2.52. Let's see. 40. No, it's kind of going the wrong way. Down to 40. It's 2,900. Profit factor is a little higher there at 30, kind of like that. And now these numbers, the long and short sides, can be wildly different. And see, that actually brought my profit factor up quite a bit. Shorting, having smaller take profits. But here's the thing. I know AMD and I know the stock, and it recently had really big pullbacks. So it's kind of cherry picking a little bit. So that's why you want to find a that's why I say you need to know how to trade, and you need to know how to you need to know the ticker that you're trading, and you need to know how to read charts, this and that, so that you can find the proper sizes. And I'm going to go with 30 on this one, I think. Let's see, what did 20 have? Yeah, 20 is a little better, actually. We'll try 2.56. That's actually pretty good right there. Dual D20s on this one, which means, here, actually I can show you this right here. So we have, let me actually just standardize this real quick. Instead of percent of equity, we'll trade 100 shares every time it trades. Okay, there we go. It's a little easier to understand. So we've got our entry here of 100 shares. Small profit is set at 20, so it takes 20%. The next small profit takes 20% of 80, which is the remaining. Thus, it takes off 16. And then we actually have a break-even stop because, remember, we have an offset break-even. So it stopped us out there at our offset break-even, which actually turned out to be good because it came up and then it fell. So we kept all the profit in this trade. One before that, we had a loss. For that. This is a really nice one. Look at this one right here. Dang. And this is why this is so powerful. Okay, so the entry right here at 89.43. First profit right here, $90.29. Look how it top ticks this move. Look how it top ticks this move. That's beautiful. Okay, it comes back down. We're still in the trade. It did hit the break-even line, but we're still in the trade, and that's why we want to make sure that our offset break-evens aren't too close. And then it keeps going, and we get another take profit up here. It was a couple of bars late, but that's okay because we still had a nice level here at 90.72. And then it completely closed the trade here at 90.53 after an entry of 89.43. That's really nice. Really nice little day trade there. So you did the same thing back here too. Look at this. This is all in, this was its own day actually. And then I went to the next day here. It's beautiful, huh? All right. Let me make this a little bit easier. Session breaks. There we go. Sometimes, and this is why I mentioned this earlier, about having it set to extended or regular hours. If you're on a ticker that normally trades after hours, so Forex or futures, then have it set to extended hours. But if you're on a ticker that is normally most active, mostly traded during regular hours, and set it to regular hours, because sometimes you're going to end up with a swing. Now, it won't open. Now, we'll look at this right here. Timestring ends at 1500, right? So it won't open after 1 o'clock my time. So right here, it won't open a trade, but it will close one after that time. And sometimes it's caught a really good trend, and the trend will continue into the next day, and you'll end up with an overnight swing trade that's just awesome. So that's why I say to do that. And that's one of the things that this algo can catch, and one of the things that it was built to do. So there we go. Now that we've gone all the way through that, what we're going to do is we're going to go back to the top, and we're going to start to fiddle with things. And we want to make sure that these numbers are right. Generally, that first pass through is going to be really close, but you can go back up, and sometimes you can fine tune it a little bit more. Usually your first pass through is going to be pretty good, though, and pretty close. So we'll try here a little bit. That wasn't good. That's not good either. But you see, like, it changes linearly, right? Like, it's getting worse, but it's not like huge jumps. So you know we aren't cherry picking. Yeah, same thing there. It gets worse, but it's not this crazy graph. So you know we're not cherry picking. So 1.2 is right. We'll look at the length. — 27 might be a little better. I'm sorry, 20. Yeah, 27. Yeah, 75, 2.56. Yeah, 27 is slightly better now. See that? How I just changed a little bit. Double check the drawdown. That drawdown doesn't change. Okay. Now the moving average, this is where I'll start to mess with this. So we've got this 200. And again, with all of this, we have to be very careful that we're not cherry picking. Okay? And again, I'll define that. It's where you change something and it just happens to catch one trade that's a monster trade, and it really skews your numbers. So be really cautious about it and look back through your data. Okay? It can really do that with this setting. I'll start to move this in sections of 25 usually. And sometimes you'll end up with kind of a weird number here. That's okay. As long as it's not cherry picking, it can be a weird number. It doesn't have to be 200. Okay, so we moved it by 50 in either direction and it just got worse. I'll check SMA. That doesn't look good. Normally, if you change to it and it looks bad, then the whole thing's going to be bad. Yeah, it's not looking very good. Just to see what it looks like, we'll drop to 100. Yeah, it's not very good. So, but you guys see again, I mean, the chart's staying relatively the same. You know, we're just trying to squeak a little bit out of it. That's again just indicative that all of your settings are really strong. We'll go to the WMA. Oh, look at the hold. The hold is usually terrible unless you're on particular stocks. Yeah, this doesn't look very good. Sometimes it needs really weird numbers too. Like I say, I only include it because it tends to work really good on Forex for whatever reason. So we'll go back to the EMA 200. All right. Now the last thing we want to do is come back to the time string. Now I had previously set this just to exclude power hour and to exclude Monday and Friday. And now I'll come back and look at this. And the reason I do that right up front is because Monday and Friday generally kind of suck for trading. And I want to exclude outlier variables. So I'm going to exclude power hour right off the bat because it has weird swings in it that aren't indicative of the rest of the trading day. And Monday and Friday are the same way. Monday, because people are coming in from the weekend, they have to digest any news over the weekend, and we don't have any previous levels of support from the previous day, so it's kind of a funky day. Friday also has weird outliers in it because on Friday, people are positioning themselves to go into the weekend. So they'll tend to sell or buy specifically on what news they think might come out over the weekend, or what they might be fearful of, right? So by removing those 2 days, we give ourselves a much better core sample to work with. Now that we've done all the rest of this and we've went back to the trend, messed with the trend, and we feel good about the rest of this, and like I say, you can actually go all the way back through this list and mess with these things. You can mess with all the numbers. You can go all the way to the bottom, come all the way back up, go all the way to the bottom again, and go again and again and again. I know from experience, this is pretty close, though. This is virtually as good as it's going to get with this. So we'll come to the time string, and this is how I finish it up. So let's add Monday back in and see the change. Okay, so we're at 2,600, 2,700, 75% win rate, 2.5 profit factor. We'll add Monday back in. That sucked. All right, win rate went down, profit factor went down, and look, we made a couple extra bucks, but now the curve is kind of jaggy. See how many extra trades that added. 181. Let's go back. 144. It added a lot of trades. 33 trades. And we only got a couple hundred extra bucks. That's not worth it. And that's normally what I see on Mondays and Fridays. So let's try Friday. Yeah. See, it brings us down a little bit, down a little bit. Added again another 41 trades and barely any more profit. So that's why I kick out Monday and Friday usually, because it adds a whole bunch of trades, maybe a little bit of net profit. Profit factor usually goes down. Drawdown might go up a little bit. But if I want more net profit, the cool thing about the stock market is that it's scalable. I'll show you how I get more net profit. From 26 to 53. Ta-da! That's how I get more net profit. I don't care about eking out every little bit in this backtesting. The net profit is probably the least important variable in here. And if you take anything away from this, it's that is the least important variable, and the profit factor is the most important variable, followed by, well, I should say, profit factor and smoothness of the curve are your most important variables. You want to see this curve go smooth from lower left to upper right, as smooth as it can be, right? So in this example, I mean, you get a little dip here, a little dip there, some jaggies going up here, but that's okay. Overall, you could draw a relatively straight line from here to there, and that's what you want to see, because that means, in conjunction with a good profit factor, that means that your strategy is not cherry picking. And that is the most important thing. How many times have I said that now? At least half dozen. You do not want to let your strategy cherry pick, because if it does, and then you try to forward test it, you are most likely going to lose because it's not going to catch those couple of trades that it cherry picked. Whereas if we have a good profit factor and a curve that goes from the lower left to the upper right over a reasonable amount of time, in this case about 3 months, we know that that strategy is good and it can be put into play to forward test and to trade with. And in fact, this stock that you see right here is going to be the first one that I use in the automated trading systems, which are actually going into alpha this week. So if you're listening to this in the future, that's when this is being recorded. And lastly, I'm going to show you how do you save this? Because you can take a picture, like I mentioned before. Oops. Or if you want to share this with somebody or whatever, you can take a picture of the box. That's why the box exists. But that's kind of a hassle, right? You don't want to have to type this in every time. Go to indicators up here, and to the right of it, you have this little 4 square thing, and it says indicator templates. You click it, save. You'll type in the template name. I use ticker and time frame. You see I have this in here from before, ticker and time frame, and then click remember symbol and remember interval, save. And then if you have it in here and you're updating it, just hit yes, you want to replace it, and voila. Now, all you have to do, so if we go to, we'll just open a random new stock, go to Microsoft on the daily, we'll take the algo out. Okay, and now we're just looking at a chart of Microsoft. I'm here and I want to go see that what I was just looking at, indicator template, boom, I'm right back to it. And here's all of my settings ready to go. Okay. And then the last thing that we'll talk about right here, and I will show more examples here of how to build various strategies. So look through the playlist because more examples will come out. But the last thing I'm going to show you here is how to set the alerts. You'll go to the alert, and then you'll put in a webhook URL. If you're using this with the automated trading system, this is where you put it in. Make sure webhook URL is selected. No alert name is necessary. And then you're going to paste in whatever you want in here. Now, if you're pasting this in for your own usage and your own personal usage, your own personal trading, we do have something you can copy out of the indicator updates channel in Discord, and it looks like this right here. And it's the same alerts that come through the swing trade bot channel, and those will give you those alerts. If you are using this with the automated trader through the webhook, then you'll be able to copy and paste out of the program something for this. It'll be a more generated message, and that will be explained more fully in the instructionals for that program. It's just a little bit beyond what I've got here. So that is how you set the alerts. And that is how you change this around and you make a new strategy. I will have, like I say, I will have more videos coming out showing me adjusting on different time frames, different tickers. But this video now is reaching over an hour. So if you paid attention this long, congratulations. And hopefully this has given you a bit of a place to start with the algorithm. Please understand that it's a little complex and you're going to need a little bit of time to get used to using it. But this is an incredibly powerful tool for somebody that already knows how to trade and wants to take their trading to the next level by having an easily repeatable strategy like this that's computer generated, computer automated. So thank you very much. Have a nice day and take care.